Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and in tonight's free video, I wanted to start off with a couple of index ETFs, and then we'll break down into a couple individual stocks. Obviously, the market's had a very rough day to the downside today, and if there's anything that I try to focus on with options trading, it is just not getting short at the lows, because this, to some degree, preys on fear. It requires that you pay up for your options when volatility spikes, and it's just a tough way to actually make a living. Now, the way that I think instead is how far are these given underlyings away from my 21 EMA, and I'm most always referencing that off of a daily chart. You'll notice that most always, and in most any market, price does have a tendency to revert back to these moving averages, and you can use this as a key to keep yourself grounded and not get out here and start chasing things to the short side when they're down here, or coming out trying to buy them when they're too far away from that level. One other thing that I like to complement with this type of work. Okay, so for one, we're looking for the snapback to the 21 EMA. Then I'm also looking for relationships where you've seen declines like this before. So from this swing high to swing low, does that have any relationship with this high to swing low? Maybe not, but there may be others inside of it that do. So you're starting to recognize a little bit more patterns, and then you're saying, like in this instance, let's take the decline that came from, this was the high made on December 9th, down into the swing low just a few days after. So from swing high to swing low projected from the high that we went into heading into the weekend, notice how these start to show some similarity. Now, I'm not saying to rush out here and buy IWM. All I'm saying is that you may be starting to get into a point where at the very least we can look for a bounce. I also like to tie in any retracements with it. Extensions, retracements, and symmetry all work together to create the confluence of these zones. So here in IWM, we're looking at the low for the day. We're sitting here at 109.08. Your 1618 extension of this swing was 109.06. So it's not perfect, but it does give you zones to start to consider where you are too far to chase to the short side. You have to be careful for the snapback to the 21. If you want to play that, the way I would look at doing it are either put credit spreads or bullish butterflies, trying to center them back up there around this zone. Now that's the way I'm thinking in the short term. Now granted, Tuesday, Wednesday, Thursday, we may see a little bit more selling, but use this concept on any ticker that you'd like to use, and use it to help you to start get an area to play those snapbacks. Once we get through the January monthly expiration, that's when I'm going to be geared up a little bit more to playing these markets to the downside. And two that I'm going to focus on are Oxy and Halliburton. And I think the big thing between the contrast between talking about these versus talking about IWM is thinking that in the short term, indexes are geared to potentially have a pop. In the long term, I think things are a bit more dicey, and that's where I would go to these bigger long-term signals. They look good for more bearish pressure. So I hope that gives you ideas on how to play the next couple of weeks, the next couple of months if you're looking for some broader term trades, and at the very least keep you out of chasing at any of those situations. So I hope it helps. You guys have a great rest of your night, and I will see you at the next free video.